Good morning. Welcome to this weekly market update brought to you by TreasuryONE. And with me today is currency strategist André Cilliers. André, luckily we don't have to talk about geopolitics this morning. I think it's a little bit stable, although there's been one or two attacks in the Strait of Hormuz on tankers, and oil prices, like I've just looked up, is slightly up, almost like 1.7%. But that's just not the main driving factor at the moment for currency markets. One of the things that we spoke about last week was US jobs data that was coming out on Thursday before they celebrated the long weekend and the 250th year of US freedom and independence. So on Thursday, the jobs data came out. It disappointed a little bit, adding less jobs, but how did it play out in the markets?
Richard, good morning. If you look at how it played out in the markets, then it is simply, and we've spoken and used those words before, the stance is shifted. Rates will remain at elevated levels for longer. It will not be declining. It will not be going up. It will remain at these levels for a longer period. Jobs data added 57,000 jobs. That was less than what was expected, but importantly, the revision figures for the last 2 months was a combined 74,000 jobs less. So if I look at a picture over 3 months, then it says not a very good picture, a relatively negative picture in terms of less jobs, more unemployment possibly on the cards. And that is one of the driving factors for decision making by the Federal Reserve. What's one of their targets is to have full employment, and the other target is to have low inflation at around 2%. That's their target level. Now, if your jobs data shifts to a more negative stance, and there is the possibility that with the war and geopolitical situation that's easing, that inflation could start moving lower, especially since wage growth is also lower than inflation, which means that your consumer is becoming squeezed. And that simply says if your consumer becomes squeezed, they could spend less. That's why there's less jobs. So it's through the cycles that it goes. And if oil prices then continues to go lower, takes the edge off the possibility of higher inflation, then it could be worthwhile for the Fed to just keep their interest rates at these levels for a longer period, so that you have a balance between job creation and inflation that eventually could turn lower. So I think no changes in interest rates for the moment. It will just stay at elevated levels for a little bit longer.
And yes, thanks for that. And so with the fact that the Fed is going to keep interest rates higher for longer, and what we're seeing in the Japanese yen at the moment being under pressure, while having interest rates at 1% at this stage, we've seen another dynamic play out that it fuels the carry trade at this moment. Can you just give us a little bit more insight into what's happening in the Japanese front?
Yes, Richard, but you're close to the coal fire there, so I think you should just quickly run everybody through what happens here on this carry trade and why it could possibly change, and what's the impact for especially the rand in such a case.
Yeah, so traditionally the Japanese yen, cheaper interest rates, currently they're sitting at 1% interest rates, and if you speak, America is sitting at 3.75, South Africa is sitting at 7%. So generally you borrow money in the cheap currency, you invest it in a high yielding currency like the rand, and the rand's been one of the benefactors of the yen. If you can see if the yen since 2005 has been under tremendous pressure. Every time it reaches around the 160 level, there's been intervention from Japanese central bank. We haven't seen it at this stage now. It's currently sitting at 162 under pressure. They said they're not going to properly intervene in it. They'll probably use different tactics, more stealth tactics, to not be seen as intervening, because every time they've intervened, it strengthens a little bit, but then it just weakens back. But the people think, and the market thinks, that the yen is going to stay under pressure for a prolonged period, fueling the carry trade. But the caveat is, if there's interference or the yen all of a sudden just strengthens, it can cause an unwind in the carry trade and have a negative effect on the rand in the emerging markets, as people will uh, pull money out of the high yielding currencies, put it back in the yen to cover the carry, the negative carry that they probably can have on the stronger side of it. So for the rand, it happened in 2024 in August. It can probably happen again. So that's just something we need to hold off, look out for, that there's possible rand weakness that can happen if the carry trade stands to unwind. And with the rand currently sitting stronger at around the 1625 level, we've been advocating, Andre, for a while that the rand's comfortable in that 1625, 1675 type of range. Are we still comfortable with that range for now? Or is there something that's going to change quickly on that?
Richard, thank you. Let me immediately start by saying, for the moment, I am very happy with the 1625, 1675 range. However, there was a time in the English politics that prime ministers did sit in office for quite a long time, a little different from what it is now. But there was a guy called Mr. Macmillan, and he coined the phrase, the winds of change. Now, if I look at the rand, and I look at the strength of the rand, then a heck of a lot of that was built around external factors. Interest rates in America that looked as if they could come down to lower levels. It at one stage looked that the inflation was under control, coming down. The war changed a heck of a lot of that, and today we spoke about interest rates that could remain at higher levels for longer. You've now alluded to the fact and spoken about the yen that could also, if there's a sudden change or a quick change in the value of the yen because of intervention and so forth, that it could impact on how the flow of money into high yield currencies are being watched and monitored. Because the change in a currency's value could negate the positiveness of that higher interest rate that you earn. The winds of change that I refer to is more locally, because locally, it's not always such a pretty picture. We're still faced with extremely low economic growth. We've seen the whole situation around illegal immigrants and the sending home of illegal immigrants. But that's got an impact of how the government will react and how much money is being put to solve that problem, because it's not cheap. But apart from that, the GNU, with the changes in the cabinet that came in, and the situation around local elections, could all have an impact on the stability of the GNU going forward and so forth. And at the same time, we have to look at how long can the central GNU government that we have with the Mr. Godangwana in the finance department, how long can he continue with the fiscal discipline that is currently there? Because I think it's beginning to come under threat. And there's a lot of places in the state that is just drinking up money and shrinking budgets and so forth. And we speak about Sunroll, Nesfas, Prasa, unemployment fund, road accident fund. None of those are in good shape, and it's all needing money. And if money starts being thrown into that, especially with elections and trying to get that propped up so that you can get a few votes, then that could also negatively impact on the rand's value, because that would be some of those winds of change that come in. But those winds of change has got the tendency of actually igniting other stronger winds, like changes in flow of money internationally and so forth. So I am concerned, and I think that there could be changes that needs to be watched, very careful. And there is the possibility always that there could be a sudden move. So, but for the moment, I repeat, I'm happy with the 25.75 bracket.
Andreas, thank you for your time once again. We'll be back next week and enjoy the week that lies ahead. Cheers for now.
Thank you, Richard.